Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. If you've been watching the NDTV Profit screen over the course of the last couple of days, you will have noticed that the rupee has hit an all-time low against the US dollar. You will also have noticed that silver prices are at an all-time high and gold prices have been red hot all of this year. The question that we're asking is, why is the Indian rupee behaving the way it is right now, particularly because a few of you will know this. The US dollar hasn't been at its strongest in the recent past. I'm joined at the start by Navneet Damani, who is a Group Senior Vice President and Head of Commodities Research at Motilal Oswal. Navneet, thanks so much for taking the time. Let me ask you this, and I know that Motilal Oswal does not actively trade currencies anymore. There used to be a currency desk previously, but you will be tracking this, so therefore you'll be able to tell me what is going on. What's happened with the rupee in the recent past?
Well, we are a very active commodity desk. We definitely have to track rupee day in, day out because largely it's linked to our business line as well. But it's a certain surprise for many of us with the kind of depreciation we are seeing in the INR. Largely because if we see our GDP growth, as last report is around 8.2%. Inflation is well within control at 0.25%. This week around, you are possibly going to see a rate cut from the RBI. 25-point rate cut looks to be given, but maybe a 50-point could be a surprise as well. And macros also look pretty much okay. But still, even after that, and as you rightly pointed, dollar index has been hovering around maybe 99 and 100 for a very long time. Still, we continue to depreciate from 83, 84 levels to, say, as we speak, to a lifetime low of 90 rupees. So I think it's more of macros as far as CAD or current account deficit is concerned, which could come into picture as we approach the end of the year. And typically, the deal between US and India, which has been lingering around for the last couple of weeks, where every Thursday, Friday we get hopes and expectation of a possible deal over the weekend, and it doesn't come through, which is adding to the kind of depreciation. Not to forget that we have been active. Flight of capital from the Indian equity markets roughly to the tune of 1.5 lakh crores over the last few months, where you've seen a massive selling coming in from FIs, and that has been observed by the DI, but there has been a flight of capital from at least Indian markets from the domestic side, from the FI side, that is also adding to some kind of depreciation in the INR.
Okay, so it's various factors working together, and it's also, Navneet, the new RBI governor, as soon as the new RBI governor took charge, there was a bit of a change in the policy, wasn't there? When you had Shaktikanta Das in place, there was a tighter control on the rupee. And now, seemingly, the RBI is of the opinion that it does not want to defend any particular levels, that it allows a certain amount of float in the rupee and it steps in, as it did yesterday. I wonder if they've done it today as well, where they see significant volatility and movement. Is that the correct interpretation?
Well, I wouldn't concur to that because every new governor has its own stance of how they want to manage the rupee, and even during Shaktikanta Das's era, we have seen that RBI to a very large extent manages what kind of holds the rupee in case of sharp depreciation. They intervene, but not to the sake where they will have to burn out a huge amount of forex reserve to protect it. Now, this time around, you are seeing that dollar index has been pretty flat and we are depreciating, and RBI was pretty stable around 89 to the dollar, where you have seen that it was defending the rupee to a very large extent. That's the news commentary which has come out from a lot of treasury banks. But post that 89 move that was taken on and a 60 paisa sudden depreciation in one day, we've not seen or not heard much of RBI intervention actively. So it looks around that this time technicals are at play. RBI is not kind of intervening at this point in time. Maybe 90 being a psychological level, it might hold around this level, but eventually it looks like we are headed for some more depreciation, maybe towards 91, 91 and a half in the very short term.
Okay, so 91 is possible. I think a lot of people that have memory of the time when the rupee was at 50 or 45 will be thinking, I didn't ever expect that the rupee would reach this point. But the fact is, Navneet, for those people that look at the currency over a longer period and understand the economics of it, the rupee does and will depreciate against the dollar and will continue to do so in the near to medium term, won't it?
Well, we've done an analysis of last 40-45 years of rupee depreciation. In a block of 4 to 5 years, rupee tends to depreciate by about 15 to 18%. So average, you can expect that every year depreciation is to the tune of around 4 to 5%, averagely 4%. If it doesn't happen in 1 2 years, then suddenly you might see a third year having a depreciation of about 10 to 12%, which typically has been the case this time around, where 23 and 24 were pretty flattish, and post 82 83, where rupee was hovering for a very brief period of time, it started to depreciate. Now as we speak, we are around 90. This move is typically where you are an export, where you are an import driven nations, and a flight of capital generally hits you hard. But that is how it is going to be, because you are net importers of a lot of things, a net exporter of very few things. So that is going to be the thing, or the norm which will continue in the INR fashion.
Okay, all right. From the commodity standpoint, and specifically on bullion and specifically on gold, Navneet, what is the implication of a weaker rupee? Because the fact also remains that we are importers of gold. We don't produce our own gold. And so that price is what is carried forward to the Indian buyer as well, isn't it?
Well, we are net importer of gold, silver, crude, as well as palm oil. These are the four large products that we import to a very large extent. And in case rupee depreciates sharply, this it is going to hit us hard. Not only in terms of physical buyers, at least in terms of gold and silver, one has a choice if they want to buy or not if it becomes expensive. But in case of something like crude and palm and some daily livelihood items, there is no choice but to consume it even if prices go higher. So it looks like it's going to hit the consumers hard to a very large extent. The inflation that we are seeing at this point in time at 0.25 should ideally start to inch up, and over the next couple of months, it will be very interesting to see where we are headed in terms of inflation.
Okay. You know what? I've asked this question in the past, but I'm curious about what you make of it, Navneet. If I buy a gold ETF here in India, would it serve as a hedge against rupee depreciation? The reason I ask is that we are price takers of gold. We've established that fact because we are net importers of gold, and therefore the price on the ETF will track ultimately global prices. And if you look at the last 25 years, there is an adjustment of that 3% odd for depreciation in the appreciation of the rupee denominated ETF. So in effect, can it be said that if you buy a unit or whatever, 100 units of a gold ETF now, in 5 years from now, it is going to serve as a hedge against rupee depreciation?
Well, it has been doing it for the last 10, 20, 50 years that we speak. But as you say, next 5 years is going to be the same story, where rupee depreciation largely takes care of the gold hedge, or probably the inflation which hurts you. To give you a ballpoint number, rupee depreciated by about 7-8% in the last few months, and that has been reflected very well on the domestic gold prices also, where our gold prices were up about 57-58% year to date, whereas international gold prices are up merely 50-51%. So there is a lot of adjustment in terms of rupee depreciation of 7-8%, which is a depreciation of rupee which is getting built into the gold prices. So if you want to take care of the inflation piece, be long on gold and continue to be so and hold so.
Okay, so then it comes to the crux of the conversation, right? Navneet, we've had several conversations in the recent past of the course of the last few months about silver and about gold. As we speak, silver is very close to its all-time highs, and gold has also been on the up and up. The question is, what is your expectation heading into the new year for these two commodities?
Well, this has been an absolutely brilliant year for gold and silver bulls. They've made tons and tons of money, and our expectation continues to be positive on gold for the year 2026 as well. For silver, as I mentioned in the past, we are overly positive, and we expect that silver will outperform gold, which it is done in the year 2025. So 2026 is going to be no less in terms of returns as far as gold and silver are concerned. Of course, not 85-86% return that silver is given this year, but another 30-40% upside is impending in silver. Optimistically, we expect $75-80 anywhere between this price for gold on silver on the international front, and for domestic front, it reflect to around 2,20,000, 2,25,000. While for gold, we expect gold to inch lifetime high towards $47-4800. Converging it to domestic prices, it will be roughly around 1,45,000 rupees.
Fantastic. Okay. The other aspect is, what are the threats at this point? You've talked about the potential returns, but can something happen that would pose a threat to this? Because frankly, if you have a deceleration in the US economy, and if you have uncertainty there, and if you have bond yields that, on the flip side, if you have bond yields that go down or interest rate cuts that take place, that's also positive for gold, isn't it?
Well, ultimately, everything is going to be positive for gold. Even if bond yields, if you see a slew of rate cuts, which I doubt it will happen, but if that happens, then it's going to be eventually positive. What could happen is the carry trade unwinding the yen carry trade unwinding, which a lot of people have been discussing, could start to bite not only just gold and silver, but equity markets also globally. If that has to happen, everything at first instant will come down crashing. Something will come down by 10 to 15%, and something like gold and silver might fall about 4 to 5%. But eventually, gold and silver will be the only survivors, and they will rebound in the same fashion to hit another record high. So I believe that anything negative or de-dollarization, if the theme started to catch up, which is it has done in 2025, if the momentum continues to get faster in 2026, then the party is just getting started, and the returns will be much faster than what we've seen in the past.
I don't know about only survivor, but it certainly will be one of the first things to be bought in that kind of scenario. I agree with you on that, Navneet. And so therefore, we'll watch very closely for that yen carry trade to start unwinding. It has been a volatile year for the yen as well. Thanks so much for taking the time. Pleasure speaking with you.
Absolutely. Thank you.